The price of XRP continues to consolidate despite the recent price drop in recent weeks, despite the lawsuit. Meanwhile, it is said that Fed is buying XRP at $20, and this could impact the price of XRP to reach $40. Welcome to Crypto Live. Don't forget to like this video and subscribe to our channel to stay updated on our upcoming videos about cryptocurrencies. It's no secret that the lawsuit filed by the SEC against Ripple is causing XRP failures. However, it has become clear that Ripple will have the support of the U.S. presidential administration. Jerome Powell, the former chairman of the Federal Reserve, was known for his ability to calm the markets and announce the worst news so that they immediately began to recover. In recent Fed meetings, he likely left off on the wrong foot and raged, since the situation immediately changed to the opposite after he spoke. What exactly caused Powell's market share? And now that inflation has reached a rate of almost $9 trillion, what will happen to the balance sheets of regulators? I'm also going to talk about the price of Bitcoin, since the world's top financial holdings and world-renowned investment funds don't agree that it will fall, and see it reaching $90,000 this year. Then, in a few years, they usually call it $1 million. Jerome Powell raged during this recent incident. During the days leading up to the Fed meeting, the U.S. stock market was rising. Thus, as a result of the meeting, it is announced that the Fed will maintain its near-zero rate and that the tapering will continue as before and will be completed in March as expected. In his latest press conference, Jerome Powell showed us a new side of him that we hadn't seen before. He became tougher after he backed Powell for a second term as Fed chairman after he supported his candidacy. Meanwhile, he recently has ominous comments about the market. The first is an increase in inflation. According to Powell's new version, inflation may rise until the end of 2022, if not beyond. In addition, the Fed is unlikely to achieve its goal of returning the interest rate to 2% by the end of the year. Another problem is that stakes are rising. A recent meeting of the Federal Reserve discussed raising interest rates 3 times by 25 basis points. Currently, Powell revealed that the Fed will react to inflation this year, and they have the chance to change rates several times. According to the report, they're discussing the Fed meetings that will be held exactly 7 more times before the year's end, during which each meeting can raise the interest rate if inflation data warrants it. Then, 3 other important things include the reduction of the Fed's balance sheets, which are approximately $9 trillion at present. Furthermore, in March, Powell said that they finished taping, raised the bid for the first time, and began selling. In addition, the federal government's balance sheet is very large and needs significant reductions, and the situation sounds very alarming. But Powell tripped some internal switch, allowing him to smooth out the situation and say that sales will be conducted in a predictable and orderly manner. In other words, this is to avoid a market crash. A few points ought to be made clear, and the Fed doesn't strive to collapse the stock market, cryptocurrencies, gold, etc. However, they are now walking a tightrope as inflation rises on the one hand and contracts on the other. Thus, they will have to play a game when it comes to raising the rate and selling assets from the balance sheet without creating another crisis. Additionally, these actions, with simultaneous asset sales and rate increases, resulted in a 20% correction for the S&P 500 in 2018. But how will they do it in 2022? It will be exciting to see how it turns out soon. Whenever the rate starts increasing on March 16th, the Fed will hold its next meeting. Then the director of macroeconomic research at Fidelity Investment believes that $35,000 is a fair price for Bitcoin, and that prices won't go much lower than that. While deviations from the model can be significant, the analyst notes that the current price is $39,000 based on his supply model, and the further we descend from this level, the more oversold Bitcoin gets. Moreover, the price of Bitcoin seems to be near the bottom based on its ratio to gold. Also, the short-term momentum chart shows the formation of a bullish divergence. His model predicts that 1 Bitcoin could cost $110,000 by 2023, and then your price may have already risen above that current maximum of $69,000. This is a forecast from the analysts at Fidelity, who stated that we are also waiting for Bitcoin prices to rebound by $40,000 and beyond. However, our understanding is that this may only be a temporary increase, and the rate may then go to a new low. Meanwhile, XRP price suffered a fatal crash along with other altcoins in the crypto space on the last weekend of January. Despite the recovery of many cryptocurrencies, Ripple appears to have very little volatility as it forms a base. And for about 10 days, XRP has been testing the 60-cent 0.4 barrier, with a significant bias either way. Additionally, it appears that the volatility of the crypto has been lost, as daily returns hover around 2 to 4%. And the next price level of XRP will be determined by the threshold of 60.4. Moreover, the key to stimulating a 20% rise in the daily supply zone, which extends from 75.7 to 80.7 cents, will be the resurgence of buying pressure in light of the existence of a 50-day simple moving average inside of the supply zone at 77.3 cents. Further gains will likely be capped around this level. In these circumstances, a 21% gain for remittance tokens seems likely. If XRP breaks its 60.4 cent barrier, this could lead to bullish sentiment, but a break of that same support level could signal a decline. When this occurs, Ripple will again revisit the support barrier of 51.8 cents and slice through it to retrieve any sell-side liquidity that rests below it. In this case, the 20% crash would remove even more reasons for XRP price to head lower and provide a base for a move higher. The XRP bulls will want to stake their claim at this level, given its historical importance in June and March. Additionally, there is numerous headwinds restrain the current sentiment, resulting in a continued correction towards 36 cents, the low of February. With this means bulls won't resist the discount and will be able to purchase XRP at 40 cents or less. In the coming weekend, investors will have a chance to digest all the recent events and let everything settle down. In addition to this, investors could already be participating in the price action before the new trading week begins, leading to pop-in price action to the upside. So if the rally is robust and investors put large volumes into it, a return to 80 cents around the 55-day simple moving average is not impossible. If the current X column moves to 70 cents, the short entry is invalidated. Also, the long position has a hypothetical buy stop order at 63 cents, a stop loss of 59 cents, and a profit target of 77 cents. Furthermore, the reward-to-risk ratio for this trade idea is 3.5 to 1. In the current O column, the entry is on the reversal of the three boxes. Further, for this setup to remain valid, the XRP price needs to move 2 more O's to 57 cents. Then the buy, stop, and stop loss would move in tandem with any move lower in XRP. On the other hand, this still leaves the profit target unchanged. With this, the hypothetical long trade setup would no longer be valid if the XRP price moved to 56 cents and the current X column. That's all for this video about crypto, and thank you for watching. If you would like to receive updates on the crypto market, make sure you click the subscribe and bell button.